Hey, it is Troy Stavros with Cornerstone Realty Associates here in Knoxville, and I want to go over the January data that tells us what is happening in the East Tennessee and Knoxville real estate markets. Let's jump in and take a look. Okay, let's start in East Tennessee. This is comparing January of 2024 to January of 2023 to see what has happened over the last year. So currently home sales are down 7.7%. Inventory of homes is up 19.2%, so considerably more inventory on the market now as compared to last year. Pending sales are down 6.3%. New listings are up 1.5%. The median sales price is up 10.76% compared to a year ago in East Tennessee and coming in at $350,000. The average sold price per square foot came in at $205 per square foot in all of East Tennessee, and the absorption rate fell from 2.94 months worth of inventory down to 2.75 months worth of inventory. So, why might home sales and pending sales be down? More than likely, compared to a year ago, interest rates are higher now than they were a year ago. So there is a little bit less demand for homes on the market simply because some people are priced out of the market because of the higher interest rates. But if we look at the absorption rate and it falling even while inventory of homes is rising, that tells us there is still plenty of demand for homes even if inventory is rising. And we're going to see that correlate to what it says about the Knoxville market, and we're going to look at that more in depth. Okay, let's take a look at some of the numbers on the graph and get a visual of what's happening here in East Tennessee. So you can see that as far as the listing inventory, it was rising till it got to November and then has started to come down. That is typical for the winter months, typical for this time of year. As far as listing prices, we can see that those peaked in July and then started coming down and basically leveled off. Things have stayed pretty level from September all the way until now. The absorption rate, as usual, follows what is happening with inventory numbers, but we can see that peaked in November and has started coming down. Sell to list price ratio is telling us things are coming down a little bit more negotiation is happening. But even though more negotiation is happening, homes that are sought after in great locations, in great shape, and priced correctly are still seeing fierce competition, multiple offers, and are still selling for over list price. So keep that in mind. As we look down here, days on the market has been increasing, but again, that is typical for this time of year. When we look to see what homes and what price points of homes are selling the most in East Tennessee, we can see that the most sales happened last month in the $250 to $300 price point, followed by the $300 to $350 price point. But we can see the majority of the sales are happening right here in this $200 to $450 price point. As far as homes that went under contract last month, the most homes went under contract in the $250,000 to $300,000 price point, followed by the $300 to $350 price point. And then obviously this right here is where the most of them happened. $250,000 to $400,000 is where we saw the most homes go under contract in January. As far as active listings, what price points have the most active and available inventory on the market? Right now, the $350,000 to $400,000 price point has 435 homes available. After that, the next most available is $250,000 to $300,000. But again, right here, this is really the sweet spot of the most available inventory, which is $250,000 to $400,000. As far as new listings that came on the market in January in East Tennessee, the most new listings came on the market in the $350,000 to $400,000 price point, followed by $300,000 to $350,000. So right here is where most of your new listings came on the market, that $250,000 to $400,000 price point. Okay, let's jump over and take a look at Knoxville, Tennessee. This is everything that has a Knoxville, Tennessee address. If you were sending somebody a letter and its address is in Knoxville, Tennessee, this is what we're talking about. Okay, January 2024 to January 2023, home sales in Knoxville are down 2.4%. The pending sales are up slightly, 0.4%. Inventory of homes up 19.6%, so almost 20% more homes available on the market compared to a year ago. Again, that is due to interest rates being higher. We are seeing less new listings, 5.7%, fewer new listings coming on the market compared to a year ago, but the median sales price is up 16.18% and coming in at $395,000 in Knoxville, with the average sold price per square foot coming in at $209 per square foot. And the absorption rate, again, falling from 1.84 months worth of inventory down to 1.66 months worth of inventory. Super low inventory. And the fact that it's falling, even with 20% more inventory, tells us that there is demand for the homes that are on the market. Let's take a closer look and see what is happening in Knoxville. When we look here, this is our market action index, which gives us a picture of whether it's a buyer's market or a seller's market. You can see that right now we are at a 44 and that it has actually ticked up from last month. So we're at more of a seller's market this month than we were last month, and coming in at a 44. Remember that this is like a speedometer, and the 30 mile per hour number is the break even between a buyer's market and a seller's market. So below 30, you're in a buyer's market. Above 30, you're in a seller's market. So you can see right now we are at a 44, still in a seller's market, and that is specifically because of the amount of demand that we still have, and especially the low amount of inventory that we have. Speaking of demand, when we look down here and we break things down into segments, so we can break the market in Knoxville into 4 different price segments: low, then the next one up, then next above that, and then the luxury market at the top. So the lowest price segment, the average price down there is $285,000. Okay, and this kind of tells you what you can get for your money. So for $285,000, you can get around 1,300 square feet. Typically a 3-bedroom, 2-bath, age of the home around 65 years old. Those are all averages for that lowest segment. But in that lowest segment, we saw 29 homes come on the market last week for sale, and we saw 42 get absorbed. So that means last week, 29 homes came on the market in this one segment, this lowest segment, and 42 went under contract. So this is getting soaked up quickly. Anything that's coming on the market is definitely getting absorbed. So almost twice as much got absorbed as came on the market. So quite a bit of competition if you are in that price segment there. And the average days on the market down there for homes that are currently active is 42 days on the market. The next segment up, which comes in at $399,02, so basically $400,000, that gets you right around 2,000 square feet. It gets you a 3-bedroom, 2.5-bath, right around 31 years old. So last week we saw 31 new listings come on the market in that segment, and we saw 31 get absorbed. So still plenty of demand in that price segment as well. As far as the active homes on the market in that segment, they're taking 56 days on the market to sell. But still, like we said, plenty of demand there to take care of the inventory that is on the market. The next segment up in Knoxville is 549.9. In that segment, you usually get around 2,500 square feet, 4 bedrooms, 2.5 baths, typically around 18 years old. That segment saw 29 new listings come on the market last week and 20 get absorbed. Not quite the fierce demand that there is down here or here, but still enough demand to be soaking up inventory. And in that price segment, for the active homes on the market, it was taking 42 days for those to go under contract. Then in the highest price segment, which averages $827,499, in that segment you get around 3,400 square feet. You get a 4-bedroom, 3.5 bath, about 19-year-old home. And in that segment, we saw 22 new listings come on the market last week. We saw 18 get absorbed. So still there is demand in that price segment, But in that segment, it's taking 80 days for the active listings to go under contract. Let's take a look at a bigger picture here of what is happening. So this shows you where the market action index is compared to the last couple years. If I take 2022 out and I just leave pre-pandemic, which would be 2019, which is the red line, 2023, which was last year, and 2024, which is this year, you can see right now we are more of a seller's market than we were slightly last year. Last year, we were at a 52.45 market action index, and as of last week, we were at a 54.13, so a little bit better and quite a bit higher than where we were pre-pandemic. So you can see where we are there. As far as inventory goes, you can see we have slightly more inventory than we did in 2023, but considerably less inventory than we had pre-pandemic in 2019. As far as the new median list prices go, you can see that the homes that are coming on the market as new listings are higher than they were last year or any of the last few years, including pre-pandemic. So that's telling us that prices are continuing to rise. So as of right now, this past week, the new listings were coming on the market at an average of $420,000. When we look at the price decreases, we can see that since the beginning of the year, the price decreases have come down. What price decreases are telling us, they tell us how many of the active listings on the market have had to decrease their price since they've been on the market. And you could see back here last year, if we just look at 2023, which is the green, from September on, we were having 50%. So almost half of the listings on the market had to have a price decrease. Then when we got into the beginning of the year, it was still the same. In 2024, beginning of the year, January 5th, half of the homes on the market had to have a price decrease. But since then, we have seen that number decrease down to only 44%. So as that number continues to go down, that is telling us that it's becoming a better market for sellers. It's becoming more of a seller's market because they have to reduce their sales price less than they were before. As far as new listings go, this is good news for buyers. Quite a few more new listings are coming on the market. When we compare it to last year, the same week last year, we only had 61 new listings come on the market. Last week, we had 111 come on the market. So considerably more new listings coming on the market when compared to last year. Still below what would come on the market pre-pandemic, but this is good news for buyers that more listings are coming on the market. When we take a look around Knoxville and see what areas might be doing the best, right now, the best market action index, which is showing us which one has the highest and best sellers market, 37931 is at the top, followed by Oak Ridge. So those are probably the hottest markets right now, followed by Hardin Valley. When we go down to the bottom to see what is struggling the most, only one market is in an actual buyer's market, so below that 30 number, and that's Sevierville. So Sevier County is definitely more of a buyer's market compared to the other areas, and that's simply because Sevier County is inundated with investors, and with interest rates being where they are, it's harder for investors to buy and make a profit, so you're just seeing them buy less homes. So there are less sales in Sevierville than there typically would be because of the high interest rates. Less investors are buying, more investors are selling. Okay, let's jump over and take a look and see what's happening in the counties surrounding the area. All right, in Roane County, the available inventory is up 45.5%. Pending sales are down 5.2%. And the median sales price is down 6.84% in Roane County and coming in at $255,500 as of January, with the median sold price coming in at $160 per square foot. So 45.5% more inventory. It's almost 50% more inventory than they had 1 year ago. In Knox County, available inventory is up 18.5%. Pending sales are up 1.6%. The median sales price is up 13.6% in Knox County and coming in at $384,700, with the median sold price per square foot coming in at $207 per square foot. In Anderson County, available inventory is up 65.7%. Pending sales are down 16%, and the median sales price is up 16.8% and coming in at $275,000, with the median sold price per square foot coming in at $198 per square foot. In Loudoun County, the available inventory is 16.8% higher than it was a year ago. Pending sales are down 13.1%, and the median sales price in Loudoun County is down 5.27% compared to a year ago, coming in at $431,000. Also in Loudoun County, the median sold price per square foot came in at $225 per square foot. In Sevier County, the available inventory is up 25.67%. Pending sales in Sevier County are down 27.52%, and the median sales price is up 1.43% and coming in at $562,950, with the median sold price per square foot in Sevier County coming in at $347 per square foot. And everything that we can see in that circle reminds us of what we just talked about with the investors. Less investors are buying, more investors are selling, thus the pending sales are down, available inventory is up, they're selling more and buying less, and therefore that's what is showing on this graphic. In Blount County, the available inventory is up 43.4%, and the pending sales are down 0.7%. The median sales price is up 6.7%, coming in at $375,575, and the median sold price per square foot in Blount County is coming in at $212 per square foot. Okay, that's all of the data information. I just want to give you a quick summary on what is happening with the market as a whole. So the East Tennessee housing market is on the cusp of a turnaround following a challenging 2-year period. We've had 2 years of low sales and tough affordability. So anticipated improvements in mortgage rates during the second half of this year and housing affordability should rejuvenate the market, inviting a wave of buyers back into the fray. This resurgence is expected to drive a notable uptick in home sales alongside a gentle rise in home prices. So we're expecting sales to rise and prices to continue rising. This paints a promising picture for the local real estate landscape. So let's talk about some key market insights. Home sales and prices. Let's talk about that. After experiencing steep declines in 2022 and 2023, the East Tennessee market is poised for a recovery. Home sales are forecasted to bounce back robustly with an 11.1% increase in the projected home sales for 2024. Home prices are predicted to grow 3.6%, although I think they could rise more than that, and that's supported by a persistent lack of housing supply that continues to push prices upward. As far as housing affordability, despite current affordability challenges, the market is expected to become more accessible as mortgage rates decrease in the second half of the year, benefiting those previously priced out of the market. The Knoxville metropolitan area in particular saw home prices rise by 10.58% year over year through the end of 2023, which indicates sustained demand and investment value. So we saw prices rise almost 11%, 10.58% prices went up in 2023. Let's talk about the rental market. The rental sector has shown signs of cooling, with rent growth in Knoxville slowing to 3.9% year over year by the end of 2023. This trend is anticipated to persist with forecasted average rent increases of 3.1% in 2024. However, the apartment occupancy rate, while declining, remains exceptionally high, which reflects a robust rental market. So we will see rent prices ease. And the reason for that is we are seeing more apartments, new apartments being built. So the more supply that we have of available apartments, that will bring the rent down because more supply will soak up the demand, equaling lower rent. All right, market dynamics. The speed of home sales has increased with homes going under contract in 18 days or less. Furthermore, a significant portion of homes are still selling at or above asking price, and new construction is accounting for 12.8% of total sales. This dynamic indicates a competitive market environment driven by deep-seated supply and demand imbalance. We have much more demand and we have low supply, therefore prices are continuing to rise. While demand is down because of higher interest rates, there's still plenty of demand to soak up the little inventory that is available. And affordability challenges persist. The East Tennessee Realtors Housing Affordability Index highlights ongoing affordability issues with a significant income gap for median-priced homes. The affordability index has plummeted by 49% since the pandemic began. This marks the lowest level since 1985. Hopefully, within the second half of the year, we'll see interest rates decrease, and that will help with affordability. In conclusion, the East Tennessee housing market is set for a promising year in 2024 with an expected upswing in home sales, continued price increases. The market will offer opportunities for both buyers and sellers. Despite this backdrop of affordability challenge, the forecasted decline in mortgage rates over the second half of the year and improving conditions hint at a more inclusive market ahead. As always, long-term market forces and regional demographic shifts continue to play a crucial role in shaping the future of East Tennessee's real estate landscape. If you have any questions about any of the stuff that we talked about today in this video, or if you have questions that I might not have covered, definitely reach out to me. If you have questions about what your home might be worth, or if you're looking for a home and you have questions about the market, or you need help transitioning from where you are now into something new, please don't hesitate to reach out to us. I would love to help you. My team would love to help you. And we look forward to doing anything that we can to serve you here in East Tennessee. Have a great day. This is Troy Stavros with Cornerstone Realty Associates.